Hello traders, welcome to another video within the Performante Premium series. This video is kind of like a touch-on for the previous video we had for this Excel sheet that we've built. We have incorporated new things in the analytics, or what we call trade tracking, as well as some information on the trading base sheet as well that we'll get into within the video. But first thing I do want to say is, if you need any help or assistance within the Excel sheet, please let myself know, Keith, and I'll be able to assist you. We understand that it can be a little bit overwhelming if you've never used Excel before. We do have basic Excel videos, but I understand that it can be a little bit overwhelming. So what we can do is set up webinars and help you out. So if you are watching this video and are overwhelmed and don't really understand how to use Excel and would like to learn how in order to actually use it, please let us know and we'll be able to set up a webinar to help you out. So to continue with the video, just going to go over the real basics. We got pair symbol, so this is what pair you're going to be trading. You got buy and sell, which is going to be either to long or short, or buy or sell. You got which time frame your execution was. You get your setup. Everyone has different setups. You know, I got ascending trendline breakouts, descending trendline breakouts, bounces, horizontal zones, triangles, wedges, channels, all that stuff. You got your entrance time, which says the date and the actual time, which we'll get into within the video. And then you got your position size. I always trade pairs with US Tether mainly right now, or just Bybit, and then you'd be trading with the US dollar anyways. So then I'm just putting in the US dollars here in this example. The only reason I really put numbers in here is just to show you what the outcome looks like with 10, or I guess 11 trades. And going over it a little bit bland or without any numbers is a little bit hard to understand what is being shown, but with numbers you're able to see, okay, this is a number, and then if it's higher it's better, if it's lower it's worse, or whatever the case may be. So you got your entrance and exit, really simple. Exit time is the exact same thing. You got your date, so you know the hold time, so how long you've held it. You got your P&L, which is the profit and loss in terms of the percentage, how much you lost on the actual chart on a entry to exit basis, and then your profit loss in terms of the value you lost. And then you have your short-term pick and long-term pick. So this, you're going to hyperlink a picture that is going to show the execution time frame. If you're trading on a 5-minute, hour, whatever it is, you take a picture and hyperlink it, and then you put it on a folder within your computer so you're able to see it. And when you're going over the month, you can see every single trade, small time frame, large time frame, and then the final picture, what happened in the end. You'll wait until basically the entire trade is complete. Which way did the overall market structure go in the end? You're going to wait, like, I don't know, maybe a week to really see which way the price action went, because you don't know if it went in the intended direction until you see the price action really play out. So that is that. Initial risk is going to be the risk that you're setting from the entry point to the stop loss zone. The initial risk is in the total dollars, so you know how much you're exactly risking per trade basis every single time. And then you have the risk on the total portfolio, so you know how much you're risking on the total portfolio, which is very, very important. And then you have the current capital, which will just show you the capital that you have from the initial, which is going to start right here. So when you're starting out, you'd put the dollar value that you're trading, if it's $1,000, if it's $500, whatever you're starting out with. You could paper trade as well. So this is a great program in Excel sheet to learn how to paper trade with. So you could start with 10 grand, you could start with 100 grand, you could start with $1,000, it doesn't matter. You could start with whatever amount of money you want, and what really matters is the actual trade tracking and the stats that are gonna come out of you trading. So if you're paper trading, this allows you to see how you're doing, what you're doing well, what you need to work on. So you don't even need to risk real money to really see the value that this information and this Excel sheet will provide. And then we got the P&L and the total portfolio. So this will show you either the loss or gain over the total portfolio. So this is a 3.2% gain on the portfolio, and then this is a 2.5. Obviously, you would never want to be risking ideally more than 2, but anyways, I'm not going to be talking all about that. And then this is where we added more information. So we didn't really add information prior to this. And we'll just get our snip here and kind of go over what we introduced. We got our monthly profit and loss chart here, not much different. It shows you kind of the progress of your P&L. Pretty easy to understand. We changed a little bit. We moved our average risk reward a little bit. I'm just going to make this a little bit bigger so we can really see it, and then also change it in black so we're able to really clearly see it. So we changed where the average risk reward is. So this is going to show you the actual risk reward of the current trades you're taking, not the potential risk reward that you're putting for each trade. And then right above it, you got your win-loss. So you right there have your win-loss and risk reward. It's going to be very skewed at the beginning of the month when you're just starting at the trade. Obviously, if you've only taken 5 trades or 3 trades or even 10 trades, you're not going to get the actual average or kind of like the mean of where you're trading. So if you take 2 trades and they're both winners, it doesn't mean you're going to have 100% win rate over 100 trades, which obviously makes sense. So over 30 to 40 trades, then you'll see a little bit more of an average, and when you're able to see month over month, then you kind of see how you are trading, and then you'll be able to improve upon it with using different systems within the trade tracking sheet. And you got your average win and average loss right here. Pretty basic stuff. Winners added up. So if this is with 100 trades with the current win-loss and average risk reward and the average wins, it will give you with 100 trades, which is around 3 months, let's say, trading 30 to 40 trades a month, then you'll be able to get a potential quarter by quarter basis of the P&L. Ideally, obviously, this is very, very month by month basis, but it's good to kind of get the longer term scope or view, because it's not easy to kind of see the overall P&L rise when you're kind of doing it day to day, when you're trading day to day. When you have the longer view in front of you, it's kind of easier to take a step back and know that you don't have to trade every day, you don't have to overtrade, and this gives you more patience, in my opinion. So then moving on to the next area here, this mainly is all new other than the average max risk on each trade. That will show you the average risk that you're taking on each trade, obviously, and then max drawdown on your portfolio. This is new. This is pretty interesting. Took a little bit of time to actually incorporate this. I had to figure some stuff out, but it does provide a lot of analytics, because this is what we'll go over. Let's say you have your P&L chart right here. It will go over how the worst case scenario, how much you're dropping for P&L. So in this certain chart, you can see from the high right here, from the low, that is a certain drop. We can see from the high right here to the low, that is a certain drop. We can see right here, high to the low, that is a certain drop, and that is the maximum drawdown that you're going to have on your P&L. And this shows it right here. So my maximum, or this trader's maximum drawdown on portfolio in this example, 10 trades, is going to be 2.89. So from this high here, to this low here, is going to be basically 2.9%. So that is going to give you your maximum drawdown for the month, and if you go over through month and month over month over month, you have a good understanding what your max drawdown on the total portfolio is, which is good for understanding how you manage risk when you're in the hole or in a losing, kind of struggling battle. Maybe you have some challenges with family or friends, or just struggling altogether in a drawdown, like it's not fun. Everyone gets them, so being able to try and manage this number is pretty important. Maybe you have some sort of parameters, like let's say this hits like 5 or 7 or 10, then you might want to set some parameters that you're going to, I don't know, take just one good trade. Doesn't matter if it's paper trading, or you could set like just, I'm going to win one, even if it's a single dollar, you're going to win a trade, and then you're going to look to win another single dollar, so it kind of gets you on the ball of winning, even if you're winning absolutely nothing, as long as it's covering commissions. And it could be a total scalp, but that's another opportunity to kind of get yourself out of the hole. It's not ideal, obviously, but if you're really struggling psychologically with a drawdown, that can help quite a bit in terms of helping that momentum kick in. And then just below it, you got biggest trade of the month. It'll tell you the most amount of... Wait a second, that doesn't make sense. Oh wait, yeah it does. Yeah it does. 0.7. Okay, I was thinking of different numbers. So this is the biggest trade of the month. $334, which is a percent gain on the portfolio of 3.19. So you can see that one trade, one solid profitable trade that we had this month will cover the entire drawdown that we had for this trader, whoever this person is. So that is great to see. That is solid risk reward. That means for an entire drawdown, you have one good trade that can completely wipe out this person's drawdown. Obviously, it's only 10 trades, so it's not going to really give you enough information. You like to see around 30, 35, maybe 40 trades. That will give you a good amount of information as a sample size, in my opinion, to analyze how your system is, how your psychology is, and give you a good breakdown of how you're trading, in my personal opinion, which is about a month. So going over through a month-by-month basis, seeing what you're doing well, seeing what you could do better, working on those aspects, in my opinion, is a good way to structurally get better as a trader. And then to finally finish it off, we got current P&L, which is showing you a dynamic P&L, and then it's going to give you a percentage of that as well. So that is the trading edition, or trading section edition that we incorporated. Some new information. I really like the max drawdown on the portfolio. We didn't have that before. Took a little bit of figuring out how to do, but we got it to work, which is great to see. That will be important in risk management, because we do not stress, but we do say within the videos, within the education series, that you have to understand the drawdown. And before, you used to just look at this P&L on total portfolio and seeing the max drawdown that we could find, which on here 2.6 and then 0.4. And you can see right here, that's the max drawdown right there. And then we get a 1.7 to kick us back in. And then here's that 3.2, the highest trade that we had, which is significantly greater than the most drawdown, which we just had before. So that is the biggest move. And this was the drawdown. And then we kicked back up, and then we haven't hit the high yet. So, in my opinion, great way to understand how you're trading. I know it's really hard to face this truth sometimes, because this will literally throw whatever you're doing wrong in your face, and you have to be willing to accept it and learn from it, or else you will not be able to really grow. You have to be able to accept constructive criticism with open arms, welcoming it into your life. Not really going to talk about the psychology. We've already talked about this, right? You're entering your setup grade, you're entering your trade management grade, you're entering what you thought of before, during, after, and that's about it for this trade. Trade info, we already talked about. You're commenting on your trade setup, you're commenting on your position sizing, you're commenting on your entry, you're commenting on your trade management, and you're commenting on your risk management. Quick one sentence, 5-6 words. It doesn't really have to be anything crazy. Just, was it good? Was it medium? Was it bad? Not going too much depth into it, because obviously we have the psychology aspect, but this is a quick little breakdown. And then you got the must completes, which is going to incorporate this information into the trade tracking sheet. So theoretically, if you're lazy, if you're not super disciplined, you don't have to put in this, but the must completes are something that you really want to do, and it's a lot quicker. You don't have to really think about it. It's just a quick yes or no, or you just put in a Y or N, and then you have, was a bigger, larger macro trend like the daily chart in an uptrend, a downtrend, or consolidation. Super simple. And then how far did the price go to your final take profit area? That will give you that information there. And then one thing that you can work on, if there's something that you can work on, if you did everything right and the trade still didn't go in your favor, obviously that happens and there's nothing you can work on. But if there's something that you said, hey, even if it went my way, or if I took a loss, this is something that I could have improved on to better myself as a trader from this point onward. The number one thing is understanding the process, not the quick profit, because it's easy to put on a shitty trade and still make money. It's hard to be stuck with the same process over and over and make sure you understand it like the back of your hand. A lot harder to do that, but it will help you out in the long run, because you have a systematic way of approaching the market. So now we'll get to the most fun part of the entire video. Fun for me, at least, I don't know, I found it very cool, is the trade tracking sheet. Now we're going to break this down into sections so it's not overwhelming, and we're going to do it quite simply just by breaking it down like so. Actually, what we can do is break it down even simpler, like so, and then we'll just go like this. So it's really easy to understand. So number one thing that we're able to see is right here is the pattern. So this is kind of all the patterns that we're going to be able to trade, and you can also change it if you are trading different patterns. You can actually change these, and then it'll change the rest of the Excel sheet. Everything's kind of linked to these ones. You will have to change these to make abbreviations or like symbols, I guess, for the actual pattern. But you got different patterns, and then this is how many times it occurred. The count is like the number of times it occurred, simple as that. And then you got the number of times it won, and the number of times it lost. All it's seeing is number of times that it actually made you money. Doesn't matter if it's $1, doesn't matter if it is the max winnings that you've ever had in your life. That just counts that. And then the win rate is obviously just the number of times it won versus lost. So you see out of the 3 times it won twice, so it's 66.7, and then same thing for the different stats within the wins and losses, and then profit and loss. So this is out of the 3 times, this is how much it profited this particular pattern. And then, for example, this horizontal zone breakout, you traded it twice and you made $53 because you won one and you lost one, but you came out positive. And the trade that you lost money on was the descending triangle. You traded it once and you really lost quite a bit, $268 for that one trade. But every single other pattern you made money on. So this will kind of show you if you're consistently seeing a pattern that you're trading make you money, that's great. But if it's consistently making you lose money, obviously it might be a pattern that you need to A, work on, B, backtest more, or C, just drop it altogether. So that is what that is showing you. The next thing we're going to go over is these 2 things right here. And we'll just make it really, really important so you're not really seeing anything else. So we got pattern setup grade. So this is what was on the psychology chart. So this you will be putting in before you actually enter. So this is when you're entering. How does the setup actually look to you? Is it an A? Should you be putting on like a significant amount of your size? Is it a B or is it a C where you're putting on a feeler trade where you don't have complete validation but you want to have a little bit of exposure? Then it makes sense to put on a C, and then once you stack up and get to an A or B, then you can size and put on more, but at this point in time you'd really only be putting on feeler trades, and then once you get to a B you'd be putting on more, and then if you get to an A, that's kind of when you'd be putting on your max percentage at like 2% or whatever your max percentage is in your risk reward and your risk management is there, then you'd be putting in. And obviously you'd want to see higher amounts of money from the A's and B's, and also when you're adding additional amounts of money, it makes sense to start at a C, and then as you grade up, you can change it. Because I change it, I know it doesn't make it perfectly, because if you close the position at a C and you only put on a feeler trade, then it counts as a C. But if you grade it up and the price continues to trend up, then you can grade it as an A, because the price continued to trend up and it turned into an A with the price action continuing to move up. And then you got the trade management, which is going after. How did you manage the trade overall? Once you're out of all your positions, did you manage it well? Did you raise your stop loss too quickly and then it got stopped out and then it went up higher? Did you not take profits when you should have? There's a lot of things obviously that can go on, and this is just basically grading how you did with your trade management, and it'll give you kind of the P&L of how the outcome was for all the trades that you took within that trade management grade. Not going to give you an ideal representation, obviously, because you could have this month entered all of, or managed everything perfectly because, it hit stop loss. You could still manage the trade perfectly if you managed risk, it hit your stop loss, you did everything right, it was within the plan, you managed the plan perfectly. It's still an A, even though if you lost money, it's a manageable loss. You knew the risk that you were taking on before you even entered. I'm losing $100, I'm losing $500, I'm losing $1,000, whatever. I'm losing $10, $1, it doesn't matter, right? So I'm losing this amount of money potentially, but this opportunity, this particular setup could give me, 2 times that, or 3 times that, or 4 times that, potentially. So then you're risking that much, and if you lose, well, that's just unfortunate because the market may just, there could be one seller that's going to dump a position that has a large amount of BTC, and it can completely wipe you out and just hit your stop loss, or something can, happen in the market you have no idea. So this isn't a perfect indicator, but over time you'll see the rhythm that you kind of have, and then maybe you'll be downgrading some of your A's to B's, or downgrading some of your C or B's to C's, and you'll be able to analyze how you're managing your trade. Next one, let's move down here. I know there's definitely quite a bit of information, but bear with us. if you actually fill out the initial stuff that we talked about, this will be so important and so useful, I can promise you. The next one is going to be the different times of day, which is going to be this one, and the different days of the week. So just by filling out the when you entered, this is just going to indicate when you entered. So it'll tell you if you entered before 8 a.m. It'll tell you if you entered before any of these times by the count, and it'll tell you if you won the trade or lost the trade, and then the outcome. So all the trades added up, wins and losses before 8, and then obviously so on. Same thing with the different days of the week. If you're entering a lot of trades early days in the week, like Monday, Tuesday, or maybe even Wednesday, and they're turning out to be winners, and then you're entering maybe on Saturday and Sunday, and they turn out to be duds, maybe that gives you an indication you just don't enter at all on weekends, and you only enter on your specific days of the week if you see a pattern that you're doing well in certain days of the week, and that's a good way to analyze yourself in that regard. And then we see, oh, that's not, I guess I didn't do the days of the week right, because that's not really showing up. But that's basically what it does. And we'll see the next, the next set is going to be right here, which is like so. We got the trade setup and the different skills that you need in order to become a quality trader. So this is what we had in the trade info. So it's going to give you every single time you lost money, what could you have worked on that you indicated, and if you see a lot of different things, like if your risk management is out of proportion and you're just taking on too much risk every single time, you'll see that you get a lot of hits on your risk management, and you see a pretty significant loss because of your risk management. If you're entering on shit trades and you're unable to, have discipline, you'll see that you're losing a lot of trades, and you'll see that loss in your entries, right? So that's going to give you a good understanding of what you're doing wrong, how much it's costing you, and the key thing to work on next month. So this is a really important thing to look at for developing as a trader, in my opinion. Next thing, let's go over is this section right here. This is just the buy and sell data. You got the amount of buys right here, and then an amount of sells or shorts. Obviously, this is 100% because every single one of them are a buy. But and then you see the outcome. So this is how much money you got at the end, and then this is how much money you got at the end so far as well. Same thing as a lot of them, like you see. And then this is the number of trades you actually took for long and short, and then this is the number of times you won. Obviously, you didn't take any shorts, so it's dividing by 0, but it will give you a good understanding of maybe you're taking trades that are short and they're not working out, and you're taking a lot of longs that are great. This will give you a good understanding of what you might be doing better at for longs and shorts. And this thing is the percentage to take profit. So what it is showing you is, let's say you have an entry here and your final take profit is here, and let's say your stop loss is right here. If it's kind of moving here, and if it came to, let's say, 80% to the final take profit, so let's say that's 100% to your take profit at the very top, and it came to 80%, then it would be at this section, right? At the plus 70%. But if it went maybe only to 50%, it would be in the middle section, the yellow section. So that's what it's showing you, the percentage to the final take profit. So then you can see in this particular trader, 4 of the total trades that we took went all the way up plus 70 to our final take profit, knowing that we have 100% confirmation that we are in the money. We have taken at least 2 of our take profits, maybe 3 out of the 4 or 2 out of the 3. Definitely if we're at 70%, and we're looking very, very favorable, good trade. And we have 4 of those. And then 7, like under 70 to 50 is pretty solid. Maybe 2 out of the 4, or 1, or maybe 2 out of the 3, depending on how you set it up. And then 50 to 30, maybe 1 of the take profits were hit. 29 to 20, maybe 1 of the take profits were hit. Maybe you managed to move the stop loss to break even, and then under 19 would have been a stop loss, or you maybe move the stop loss up a little bit, but that wasn't a very profitable trader. It wasn't the right direction at all. And then moving down a little bit further again, this is the last little section here. that we're going to be looking at. So the final one that we have, or the final four I guess we have, let's start off with the right. So this is the macro trend during entry. So this is going to give you what was the macro trend when you entered. Was it in a bullish move, kind of making structural higher highs and higher lows, and you kind of entered somewhere around there, even at the low? Was it kind of in a consolidation where it entered a very, very kind of low and then it can consolidate before starting to move up? Was it kind of in these ranges or kind of in this range here where it was consolidating horizontally? Maybe that was a situation. Oops. And then we also have different market structures, obviously. So uptrend, downtrend, consolidation, and then it'll tell you how many of the trades you took within which market structure, and then also what you came out of for a P&L for each of the market structures that you place an entry in. This one is pretty interesting as well, directional bias success rate. So this will give you, even, let's say you have the entry at this point right here, and then you have your stop loss, and then you have your take profit. Let's say the trade kind of consolidated, hit your stop loss because it broke down, but it was a wick, and then it went right to your take profit. That, to me, would be still a successful bias. You hit your stop loss, and unfortunately, you got taken out of the trade, but the trade overall went towards your intended direction. So your bias, your correct direction percentage, that would be what it's representing. What it's representing is, it's not representing just some point, but like overall market flow. Were you going the right direction? If it was a consolidation, even if you got wicked out, or is it just still in consolidation? And it's a little bit biased because obviously you're making that decision if it kind of hit your take profit, but that is what it's showing. Maybe you need to loosen up your stop losses a little bit more because you're getting wicked out, even though your direction is the right way. If you're getting like 60, 70, 80, that obviously means that you are making the right directional bias, but you might not be able to have a stop loss that's working for you, so might need to reduce your position size and increase the size and distance of your stop loss, and then you might be able to, shift your risk management around so you have a higher win-loss rate and a lower risk-reward rate, but you're still making more money in the end. So that's just something that you could consider. And then we have the entry time frame, pretty self-explanatory for this one. We see the amount of money you are making for each time frame. We didn't really do a count for this because you can kind of see it, but we have the entry time frame, so the hour, 15 minute, 5 minute. You can also change this to whatever you'd like, and then the drop down menu within the trade tracking sheet will change, and then you see the amount of money that represents at each time frame. Might see something different, like if you're entering on small time frames and if it's losing you money consistently, and you're entering on larger time frames like the 1 hour. This is the execution time frame. I only put entry because I didn't have enough space, but it is the execution time frame that this is representing. And then final, this is the it's pretty interesting. You could put whatever pair you want in here. I just put pretty well the most common pairs that I trade. BTC, Ethereum, XRP, Link, TRX, BNB, NEO. Like there was one other, like I could put Matic, I could put NEO, I could put Dash, I could put a few others that I'm thinking of. EOS is a potential, but you can kind of put whatever. So this, you can put, like let's say you're trading BTC pairs, you could put USD, you could put BTC pairs like NEO BTC or Matic BTC, and it'll still search within the list of pairs that you search. So that's why I put search below right here. So you can put in whatever pairs you traded. Let's say you traded a lot of Matic BTC. You can put in Matic BTC right there, and it'll show you how many times you traded it, how many times you won, how many times you lost, and the overall outcome of the total times you traded that particular asset or that particular pair. And that is the trade tracking sheet. That is the overall analysis of it. And then the last thing is just a weighted average calculator. I don't think we put it in last time, but this is the you can see the price that you entered or exited for the weigh-ins, because it's a little bit of math and it just makes sense to have a formula do it for you. So let's say you have a multi-entry or multi-exit. Let's say you have split take profits and you have 3 take profits at like 50% and then 25-25 or like 30-33, 30-33 or like something along the lines of that. This is a really, really easy and quick way to figure out where your weighted average is. I put 2, 3, and 4. I don't really think we're going to have take profits or entries scaling in more than 4 personally, but you can obviously just like double it up because it's a weighted average. You can just reuse this by adding more information into it. And that is the trade tracking template. I hope you enjoyed it. If you have any questions, like we said, please drop a comment below. We'll definitely make sure that this is working. I'm just going to make sure that this is in the right place. Yeah, I guess it is. Yeah, we'll make sure it's working when we actually post it again, because that is currently all zeros, which is a little bit odd because the formula is there. It's just not showing any data, but we can see there's a tremendous amount of information that you can use to understand what you're doing right, what you're doing wrong, perhaps things that you didn't know before, like if you're trading really well at the beginning, kind of early stages of the week, and then as the week goes on, you're making less quality decisions, or maybe some pairs that you're just really good with trading. Like if you're really good with trading XRP, for example, and you just really love the flow and the market structure, and some pairs just naturally kind of attract some traders, and maybe you're able to make more money that way. So you might stick to only trading some pairs if you're doing really well with trading them. So that's another opportunity that you could see. Obviously, there's many other things that you can extract from the information given in this Excel sheet. And for people, like I will post this on YouTube, and for the people who think that this will be helpful for them, our subscription is $30 for the first month. We do have a 50% off coupon. It's not on all the time, and then for every month after, it is $60. But we provide a tremendous amount of information. We provide a BTC market analysis, so we provide a video going over from the weekly, more or less, not every single week, because you can't go over the weekly every single week. You can go over it maybe like twice, 3 times a week, and then the daily we go over every day because there's a new candle, and then obviously the 4 hour and hour chart is where we do our more shorter term analysis, where we're kind of diving into the consolidation zones that BTC is seeing. And we do that, and we also do a crypto market analysis. So we really go over the many different alts within the market, as well as BTC, giving a great breakdown as to how not just BTC is doing, but many different altcoins within the market, giving you a really good overview of what is happening. And also, you get different tools, different video content, different written content. We have books and a lot of other educational sources that you can use to help yourself as a trader. And this is just one of them. We're always continually adding new things to this. I'm always trying to think of ways to improve. And whenever I think of them, I always just incorporate it into a way to automatically see what I could be doing better, and this is the best way that I found to do it. Obviously, you can create programs that are a better, I guess, way of doing this, more automated, but in my opinion, you don't really get the level of depth that you get. This does take a little bit more work because you have to enter every single thing for entries exited, your psychology, you have to write about it. But if you want to get better as a trader, you have to do what other people are willing or are not willing to do. And that's with anything. If you want to succeed in really anything in life, even if you're like, I don't know, any photographer, anything, right? Like any profession, if you're not going to be willing to put in the work and spend time doing the minor details that will really kind of make or break you, like, a proper form, if you're an athlete, if you're not practicing the fundamentals and not going over your gameplay and seeing where you are, when you are, where you should have been maybe, or what you were doing right, like really seeing and engraving that positive reinforcement of, yes, this is what I'm doing, this is what is really giving me the ability to strive and take that game to the next level. This will really show you a lot of information in that regard. So I hope you enjoyed it. Like I said before, check us out if you thought that this was helpful, if you think this Excel sheet is helpful, because for $30 you can get it. You can, like, to be honest, you can download it and then just cancel the subscription if you really want, if you want to. If you don't like our services, if you just want to get this Excel sheet, I'm not really going to get butthurt about it, but it's definitely something that can help you, and that's kind of what we're about. I don't really care if it's like the worst thing in the world to spread around, because I think it will greatly help a lot of people, and a lot of people don't know how to use Excel, and I can really help with that because I have a very, very good understanding of Excel, and obviously with the age of the internet, you can basically solve almost anything with Google. I hope you enjoyed this video. If this helped you on YouTube, please check us out, because we're able to definitely do a lot on Excel and help traders out and try to get them to find their edge. So that's the end of this video. I hope you enjoyed it. Like I said, if you have any questions, and until next time, happy trading.